The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody, this is the Tax Lady. And I'm loving the weather. I mean, the weather's like you can't believe. But weather aside, we're going to teach you some stuff about tax brackets today so that when you're at a party and they go, I don't want that extra money, it's going to put me in a new tax bracket. We hope to give you some enlightenment so that you understand what tax bracket you're in and how to read your brokerage statement. And I'm joined in studio with Chris Fabian. Hey, Chris, this is yes, sir.
Hello, Esther.
They were messing with my mic. All right.
Yeah.
All right. So, how many people would you say in a week say to you, is this putting me in a new tax bracket?
A lot.
So I just thought we were trying to unscrew what happened. So now here's a little scenario. And by the way, 8030930, 8030930, star 930 in the cell phone. We would love to hear from you. We'll text at 716-8030930. Okay, so let's assume you make $12,000, you're single. How much will that person that makes $12,000 pay in taxes?
They will pay nothing.
That's right, zero. Because the standard deduction is $13,850. Okay. Let's assume that $12,000 person has a child that's under the age of 17. How much will that person has $12,000 in income pay in taxes?
Their income tax will be zero.
But what happens because they have a kid?
Well, then they have refundable credits, and they'll walk out with about $5,500.
Right. So refundable credits means that they're paying you. You're not paying an income tax. They're paying you. So Chris is absolutely right. They would get an earned income credit and a refundable child tax credit. So that person making $12,000 with a child has a refund coming federal, and they got money coming back from New York State too. But on the federal alone, they get $52.95. How much did they pay in taxes?
Zero.
Okay. So let's assume this is the same situation, but now they're up to $25,000. Okay?
Yep.
All right. You're still in the 10% tax bracket, but now your tax bill is $423. But after you do the tax bill, you then say, do you qualify for any credits? Why, my gosh, they do. And so they get an earned income credit of $34.49 and a child tax credit of $15.77. So once they make $25,000, they end up with a refund of money they didn't pay in of $5,026 on the federal and another $2,000 on New York State. Right?
Yep.
Okay. Now they're getting more prosperous. They make $40,000. Okay? Now they're in the 12% tax bracket. And their taxes are $1,987. But they get an earned income credit because they have kids, child of $1,052 and a child tax credit of $939. So what are they going to get? They're going to get a refund of $1,061. How much do they pay in taxes? Zero. Zero at 25. Okay. So time marches on. They're now making $75,000. Got 3 kids. Okay. And they're head of the household. So their tax bill now is $6,192. But do they have any credits out there?
Oh, yes.
$6,000.
Yep.
So what they really pay is $192. That's it. So I thought that would be worthwhile for people to understand how our tax code works.
Right.
Right? Our tax code is designed that if you are on the lower income rung and you have children, you really make out.
Right. But even, let's say the person is in the 12% bracket, right? And then they go over by $2,000 into the 22% bracket. How much does that cost them to make that extra money?
Okay, to go from 10 to 12?
12 to 22.
Okay, so they're going to pay an extra 8% on that layer only.
Right, on that 2,000.
Right.
So they're hardly going to pay any extra tax, but yet they made all this
$160.
extra money.
$160.
So make the money.
Right, make the money. I'm Esther Gullius, the tax lady from EG Tax, 8030930. 8030930, star 930 on your cell phone. You can text us at 716-8030930. We just wanted to give you a heads up because so many people are so confused by what a tax bracket is. You start off with the taxes, and yes, you might end up with taxes, but then you apply these credits, which are absolutely unbelievable, and you find out that in many situations, if you looked at your tax return, you would find out that many of you pay zero taxes.
Correct.
Right?
Correct. And we'll go to a text.
Okay.
It says, you got to lower. There we go. Are taxes you pay deductible from your income taxes? In other words, your county and school and town taxes from last year, are they deductible on this year's? Also, how about your state taxes you pay last year? Are they deductible? I'm confused about this, obviously.
Okay, so here's the thing. Something that's deductible is something that qualifies to be written off. However, many times after you write it off, you find out that what they're allowing you is greater than what you can deduct. And so you use what's allowable because it's better. Is that a good way to put it?
Right, but you would try on your Schedule A.
Right.
Yes, you would take your county and your school and your state taxes paid.
Right.
But there's a caveat.
Right. So here's the thing. They're going to allow you a certain deduction, which, by the way, I think people have to understand that the Trump tax changes that happened when Trump was in office, they're going away this year. So the big standard deductions could be going away. The SALT in deductibility is going to be potentially going away. So all these things are going to happen in 2024.
Right, and that the SALT is what I was talking about the caveat.
Right.
Because say your property taxes are $8,000 between your school and your county, and your state withholding is $6,000. That totals $14,000.
But you can only take a 10.
Right. The IRS limits it to $10,000.
Right.
So.
Well, actually, that was the Trump
Yep.
tax cuts, right?
Right.
Okay, let's go to the phones. 8030930, 8030930, star 930 on a cell phone. And we got Mindy. Hi, Mindy.
Hi, thanks for taking my call. I'm calling on behalf of my father. My mom passed away on Christmas Day, and he isn't sure how he should file.
Well, he's going to file a joint return with your mother. Has he been filing with her in the past?
Yes.
So they'll file. You will file a final joint return with he and your mom, and next year your mom will file as a single taxpayer.
Okay. All right. Even though she was not there the whole year, I wasn't sure how
That's
that worked.
correct.
Okay.
The interesting thing about tax law, it's like if you were alive for 2 minutes of the time you were here on Earth, you get to claim the child all year if it was born. If you pass away in January 1st of the tax year, you get to claim the person all year. So in this situation, you're going to assume that Daddy was there the whole year, and you're going to file a joint return with Mom.
Okay. Thank you very much.
All right, Mindy, I'm sorry about your dad.
Thank you very much.
All right, I'm Esther Gullius, the tax lady, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. We're going to take a short break, and we'll be back on the other side with your calls.
We are family. I got all my sisters with me.
Hey, to us, you are family, and I'm Esther Gullius, the tax lady from EG Tax, joined in studio with Chris Fabian. Hey, Christopher.
Hello.
Did I introduce you?
Yes, you did.
Okay. We got some text here.
We do. We got some text. Does everybody who works get an income credit even if you're single? Do you get an income tax credit if you're a homeowner who is single? I think there's some kind of homeowner's credit.
Okay, so I think you're talking about an earned income credit. So here's the operative word, earned. So if you are somebody with children that are under the age of 17 or qualifying individuals that are under the age of 17, then you work, then you may get an earned income credit. If you are single and you have no children, there is a limited earned income credit, but again, you need to have children. But what you have been thinking, it sounds like you've been listening, there is a form IT-229, which is a refund of your school tax, actually with your property taxes, if you pay more than 6% of your income in property taxes, and that is a credit of up to $250 to $350 on the state of New York. That's not the same as the earned income credit. So you're mixing up credits. But again, if you're paying property taxes, look into the IT-229.
Correct. And then I took out an umbrella insurance policy. Can I claim this as an expense against a rental unit?
I mean,
if it was on the rental unit,
Right.
then yes. If it's on your homeowners, just because you want one, no. It's got to be because you have the rental.
All right, but let's while we're talking about that, so any time that you have an expense for something that's income producing, it's going to be deductible if it's ordinary and necessary. If you have an umbrella policy that's on your person, then that's not tied to the rental. Okay, so you got to tie it to the rental in order for it to work, right?
Right.
Okay. What else? Anything else we got?
Sure. This is I do 1099 work and W-2 work. Last year, unfortunately, I didn't have any 1099 income, but will this year. I depreciated a large expenditure in 21 on the 1099 income. What now will happen with that depreciation with zero income for 1099 on 2023?
Right. So here's the thing: if you're still trying to make money and you didn't make money, if you're in the business, then your depreciation would continue. If, however, you stopped trying to make money, then that depreciation is suspended. So that's what would happen.
Right. So if you are making something and they didn't pay you to 2024, you could claim the loss this year. And then,
Absolutely.
Yeah. So,
Absolutely. And that's what makes taxes so confusing. All right, we're going to go to the phones, and we got Phil. Hey, Phil, how can we help you, sir?
Hey, thanks for taking my call, Esther. And I don't know who your co-host is again. You said Chris?
Christopher.
yeah.
Hey, Christopher. Thanks, guys. Appreciate you being out there today for us. So, source of discussion in my family this week, my mom's 80 years old, and she's left a living trust for my kids who are young. They're minor children. They're 15, 14, 10. And living trust includes her house. But my mom is super desperate to make sure that whatever money she has that she's leaving for these kids, besides the stocks, bonds, and annuities and the property, if my mother has no credit cards, no nothing, she has about $15,000 in debt, and she wants to make sure that gets paid off before she dies because she doesn't want the debt to pass to my kids. So whatever, I don't know what debt qualifies to be passed on. It's not a mortgage or anything. She owns her house free and clear. But, talking like big box store charge card for home improvements or whatever her little debt might be. She claims she has about little over 10,000 in debt.
I think that people don't realize that once you pass away, that debt is canceled. Now, if you are the heir and you inherit assets, then you attest to the fact that you're going to pay any outstanding obligations for the estate. So I don't know how to make your mom feel better, but to think that
either.
that's part of the deal.
Yeah, unfortunately, the debt's going to have to get paid first, and then everything will be
Right.
then distributed.
Yeah, if there's a mortgage on the house of $10,000, it would have to be paid. But if
That's
there
right.
was if the kids had, $100,000 in the bank that was left to them by my mother, would they be obligated to pay off that credit card debt?
Well,
Yes.
that's what you attest to, that
By what?
that you as the executrix will make sure that you properly dispose of all obligations that the estate left.
So that's a part of the obligation of accepting an executorship.
Right, because you're saying I'm here. I'm going to take care of everything. Grandma ain't here anymore, but I am, and that's what you promised, that you're going to do that.
Well, that's what we had tried to explain to her, that she's not going to be. I'm like, you'll be dead.
Well, let me say this.
Take the obligation on.
As people age, they become more fearful,
Well,
and yeah, Chris.
I mean, I would just tell her, you said she has stocks and savings.
Right now, why not pay it off?
Just pay it off now, and then she doesn't even have to worry about it.
Good point, Chris.
Because right now she's probably accruing at 13 to 29% interest on these charge cards.
Yes, but what I'm saying is like the stocks, the bonds, the annuities. She's not trying to sell any of them. And I told her, I says,
But why not? But Phil, why not have her sell whatever her obligations are, and pay off the debt? Then she doesn't have a problem.
Well, because these are like stocks that are left to the children. Like,
But you got to understand, Phil, they still have to pay it upon her death. So if they have to pay it, why not do it now?
well, just because of the amount of
Right, but Phil,
money that she made.
she's paying interest on these credit cards, so this debt isn't getting smaller;
Right.
it's getting bigger.
Right.
So
Right, well,
pay
she
it
has
off.
a $4,000 a month pension, though.
Okay. Well, I mean, whatever you want to do, Phil.
I know. I keep telling her the same thing. Just pay. Don't worry. If you die and the debt's still there, that we will pay. That it'll get taken care of.
Right.
So
But
don't
what
fret
Chris
over
is
the fact
mentioning
that, that-
is absolutely true. She's paying
What?
a lot of money in interest to carry that debt. Why not just liquidate it?
because she claims that she would rather finance something than pay it.
Well, then
than
it's up.
pay for it
Then
back.
then it's your mom. Your mom. That's what your mom called.
That's her
I
choice.
know.
Right.
I can't. You fight her on it, and then it becomes a bigger issue. But
I know. I gotcha.
guys.
Thank you, Phil.
I appreciate you guys. Bye-bye.
All right, thank you, sir. I'm Esther Gilius, the tax lady, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. Wanted to go to the phones, and we'll go back to Mark. Hey, Mark.
Yeah, hi. How you doing? Thank you. All right.
Good.
I'm looking at one of my 1099Rs, and it's got the distribution amount, taxable amount, but under 2B, it says taxable amount not determined. What's up with
Okay.
that? This is a 1099R, $695
What?
taxable amount, but 2B again, there's a little checkbox. Taxable
Right.
amount.
But
not
so 1B is filled in.
one says taxable distribution, $695. 2A, $695.
Tell me what the code is.
It does. It's a standard.
Box 7. What does the code say?
Box 7. Box 7, distribution code 4. Simple.
That's a death benefit. Okay. So
Yeah.
that means somebody passed away.
Correct. My mother-in-law.
And you have inherited the annuity or whatever it is, or
Yes.
IRA. And so unless you're able to go back and determine how much of it was already taxed, then you're going to end up having to pay taxes on it.
How do we figure that out?
Well, wait. Is the gross distribution less than the greater than the taxable?
They're the exact same
They don't
amount.
show any taxable. It's
No,
zero.
he's saying it shows 690. He's saying
Oh, you mean box 1?
box 1 the
one.
gross says 695 now, and box 2 the
And box-
taxable says 695.
No.
That's what
No.
he's saying.
No,
No.
you didn't. Box 1 you said was the 695, right?
Right. Box 2A is the same exact amount, 695. Box
So
Okay,
it's
well,
B.
that's
695.
taxable.
Yeah.
yeah, not determined. And the code, distribution code 4.
Okay, then
Right.
it's taxable. That
the
same
full
amount
amount.
is taxable.
Okay, another quick question. Moving on. Section 19 on a different form from Fidelity. Section 199A dividends.
Right, right.
What are those? Never saw those before.
That's a qualified distribution, which you can get a 20% deduction on.
Okay.
Qualified business income. It's qualified business income on which you can get a 20% deduction.
And is that reportable on what?
No, it's a positive thing, not a negative thing.
You have to do Form 8995.
8995, and so we
Right.
would get a credit. 20.
Right.
It was small. It was only $25.
Okay, but so you're going to save $5.
8995.
Right.
All right, and then one final question, and thank you for your time. You mentioned a few minutes ago about the property on New York State, the 250 credit, and if you pay more than 6%, is that
Right.
your AGI or is that
AGI.
after? So, all right.
AGI.
So I paid $6,000. Is that school taxes and property here in Erie County?
All property taxes that you paid on your home.
All right, so those were about $6,000, but my AGI was about 100.
Now, and by the way, this would be less star exemption.
Right. Yeah. The basic star, because we're 65. I don't think we got a senior one because we make too much money.
Yeah, but you said your AGI was 120.
AGI was about 120. This for
Yeah, well, it
so
have to be a bunch of property taxes then.
6,000.
Yeah,
Yeah,
so
you're not going to make it.
Yeah, that's
Not
like
gonna make it.
7,200. So
Right.
you would have to have. A
But
lot
for
more.
everybody else that's listening,
Yep.
if you don't have much income, do the New York
All right, very good.
229.
All right, thank you.
All right, thank you, sir. I'm Esther Golios, the tax lady, 8030930, 8030930, star 930 on a cell phone. We are going to break for news. We'll be back on the other side with your calls.
We are family. I got all my sisters with me.
Hey, you know we think of you as family, and as family members, you got access. So give us a call, 632-7886 at our corporate headquarters, and we want to help you. And that goes to Jerry, too, right?
Yeah, Jerry, give us a call. We
He
appreciate.
wrote a novel.
Yeah, we appreciate the novel, but give us a call. So because it looks like you had a lot of questions in there, and the way the text board came across was not a clear, concise pattern.
I know,
So-
and I will answer tax questions all the time. You guys know you can text me through our website at egtax.com. And the other day I was doing a tax return, and this gentleman was with my client, and he said, actually, you answered my tax question when I was texting you, and he was give me some clues. I said, you're the guy that owns the business that you have a health studio. And he says, yeah, you remember me? Yes, I remember you. So you can go to our website at egtax.com. I will answer your question. Right?
Yes.
And
But-
in the meantime, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. Let us go to Joe in Cheektowaga. Hey, Joe.
Hi, Esther. How are you?
I am marvelous. How about you, Joe?
Good. Well, I have a couple of questions for you, so I hope you can help me. I have
Okay.
a Roth IRA that's been established for about 8 years. It's my understanding that after 5 years, whatever you withdraw out of there is tax-free. My question,
Provided you're 59 and a half. Yeah.
yes. My question is this. Does that apply to any capital gains that have been accumulated through the years?
In the Roth IRA. Yeah.
Yes.
That you withdraw. Yeah.
When I begin to withdraw, is there any tax applicable to the capital gains?
No.
No.
No, that's what the Roth's claim to fame is that you put it in, you don't take a deduction, all the appreciation that happens when you take it out, provided you're there for 5 years, 59 and a half, it's all tax free.
Oh, that's good news, Esther.
Well, good.
Thank you very much.
And so Joe's dancing around in the parking lot. Okay, Joe, thanks for calling.
Okay, bye.
All right, thank you, sir. All right, what do we got
We
here?
got can post-tax RMD money be placed in a Roth IRA? Well, if you're working and you have earned income.
Here's the thing. So you got a Roth, and you take out $10,000. Okay, so there's that bucket of money. So then you say, "Gee, I'd like to make a contribution to a Roth because I'm working." They don't care where you get the money from, but you can't roll it over if you're not working.
Right. You have to have earned income on the tax return to
Correct.
make fresh contributions.
Okay, what else we got?
Do I need to include my 17-year-old son's summer job income, about $750, in our joint return?
No. So here's what's you got to know. On a tax return, when it's your Social Security number and your wife's Social Security number, that's the only income that goes on the return, unless you made an election to include the passive income that your child might have earned that you don't have to put on their return regarding kiddie tax. The rest of it, the kid will file their own return.
Exactly.
That's the
yes.
only time you ever include someone other than the spouse, the two spouses, income on their tax return. Right?
Yep.
Okay. All right, what else we got?
Why don't we go to Steve in Cheektowaga?
Hey, Steve.
Hi. Hey, just two things. For railroad retirees, they don't get Social Security. Why is it they don't pay into it? Why is that set up like that?
Well, that's because they have their own version of Social Security.
And they basically make you operate using Social Security guidelines.
Okay, so indirectly they are paying into their system, and they're just getting it back, just kind of like Social Security.
And as a matter of fact, when you take a look at the information sheet that they get, there's a Social Security equivalent and the pension equivalent for a railroad retiree.
Okay. Oh, you have to write both those down on the tax forms?
Yeah, there's
one is a 1099-R, and the other is the Social Security equivalent.
Yeah, are you retired from the railroad?
No, my friend's father is, and I just wondered why they didn't pay into Social Security, but I figured it's their own system. Is it like the air traffic controllers?
back in the
Yes, yeah,
back
like
in the day,
the old post
Right.
office, yeah.
Back in the day, they thought it would be great if these employees go under the railroad retirement system. And so right now, that's what they're receiving is Social Security equivalent and pension equivalent.
Yeah. Do you think that just makes more bureaucracy and less efficient as far as the government expenses go? You know, we're already so many trillions of dollars in debt. It just makes, I don't know, it just doesn't make so much sense if we got two different systems, and, you know, it just increases the bureaucratic.
Wait, Jerry. It is a mess out there.
Yeah.
It's a mess out there.
one
And
last
we,
thing.
on this little radio show, cannot solve the problem.
Yeah.
But I
I
think the
know.
problem can be solved if people would just think about it when they go to the voting booth. But maybe not even then.
Yeah, and then, hey, last thing, tax forms in New York State, I've been making telling them about this for 25 years. When you call, I do my own taxes. You get the paper copies. They only send you one IT 201 with a whole big pamphlet, the instruction booklet, which now the things aren't in there, the tax tables. You have to go online.
They don't want you to do that, Jerry.
What's it?
They don't want you to do that. They don't want you to file a paper return.
Right. So I've been asking them to send two IT 201. So our great state, efficiency, talk about waste. You have to order a second one, but they send you another booklet. I said, no, I just want a second.
Because they don't want you to do it the way you're doing it.
Right. Okay.
All right,
Okay.
Jer. Thank you.
Thank you.
All right. I'm Esther Golias, the tax lady from EG Tax. 8030930. 8030930, star 930 on a cell phone. You can text us at 716-8030930. What do we got?
Okay, this one is, how do you go about getting an enhanced star? I'm 67 years old.
Tell them how to do it, Chris.
Well, you got to go to your town. Okay, go to your town hall, your city hall, and ask for the application. And it's then you fill
And
it
then
out.
every
and-
municipality has kind of a threshold.
right.
So if your income is over that threshold, you're not going to get an enhanced star. You just have to stick with star.
Right. The first one will be through the town or the city. Then after that, it's all based upon your tax return. They look at your tax return to verify that your income still
Right.
qualifies. And I
Okay.
have this year, especially with interest, people
Right.
are afraid. Am I going to lose it? Well, yeah, you're going to.
That's true. That's true. Okay, I'm Esther Gilius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. Let's go to Mike in Wheatfield. Hi, Mike.
Tidbits, it says you can be required to file a tax return even if your gross income falls below the IRS filing requirements if you earn more than $400 from self-employment in 2023. Now, is a garage sale or yard sale income considered self-employment?
It all depends. It all depends on, so if you're selling your old junk that you purchased and you're selling it at a loss with no profit motive, you're just cleaning out the old garage and you make $300, but it all the stuff you sold you might have paid $3,000 for. No, that's not taxable. However, many of my clients, I have one client in particular who's just a genius, he goes out garbage picking every week. And he picks up garbage and fixes it up and kind of, makes it nice. Then he goes on eBay and he sells it. And he also has garage sales and he sells it. Well, he makes about $75,000 a year clear. That's different because that guy's trying to make money. But if you're just selling your junk at a loss, it's not taxable.
But even if, let's say you earned $700,
but if you paid $4,000 for what you sold, it's a loss that's non-deductible and it's not taxable.
So, but you still have to file even if
No,
with the added
no,
income is
you
below?
don't have to file.
Oh,
you don't have to file
If
it.
the income is below the requirement then.
If it's just you're selling your personal stuff for a loss, it doesn't get reported.
Right.
Okay.
Now, now here's the thing. You want to report it? Be my guest. But you don't have to.
Okay, the way it was worded in here, it sounded like you have to file anytime you
If
get any
you're selling
over $400
your
or something.
personal assets at a gain, then you have to report it. If you're selling your personal assets at a loss, the loss is not deductible.
But what if you're selling them for a gain as far? or
If you're
is that a
selling
loss?
it for a gain, you have to report it. But most people, 99.99999% of people selling stuff at a garage sale are selling their stuff at a loss, and it's not deductible. And they don't have a profit motive. But if you have a profit motive and you're selling your stuff at a gain, then you have to report it.
Okay, thank you.
You're welcome. Hey, whatever. Okay, what do we got? We got it. I guess we should. Let's take a short break. And I know you guys are calling 8030930, 8030930, star 930 on the cell phone. We're going to be back on the other side.
We are family. I got all my sisters with me.
Hey, to us, you are family. And I'm Esther Gilius, the tax lady. We want to help you. I mean, you can hear by the phone calls, people are confused about taxes, and we want to help you. Give us a call, 8030930, 8030930, star 930 on a cell phone. And let's go to Mike. Hey, Mike.
Good afternoon, Esther.
Hey, Mike. What can we help you with, sir?
Well, I thought the other gentleman that called in a couple calls ago was going to answer my question. Senior exemption. Dealt with some medical problems and never filed the paperwork. Usually they mail it out. Somebody said it passed the date that you have to apply for it. I'm 73.
What are you talking about, Mike?
A senior exemption for school. Sitting at a school exemption, you get.
Oh, you mean the IT 229?
No, he's talking the star.
Oh, the
and
star?
the senior for
Oh,
the county.
okay.
Star, yes, the star, senior star. You got to file every year, correct?
Yeah, I don't know when the deadlines are for that. You
But
would
call
have
your
to,
municipality
yeah,
on Monday.
call West Seneca, or I'm sorry, yeah, call West Seneca, and they'll let you know.
All right. Thank you.
All right, thank you, sir.
Sorry.
All right, let's go to Dave. Is it Dave?
Jerry.
Jerry. Hi, Jer.
Hello. Good afternoon.
How are you?
Very good. How are you?
I'm marvelous.
Good. I'm probably the Jerry who wrote the, what you call it, a novel?
Yes.
And
It was kind of a novel, and we couldn't figure out what the heck you were asking. So
okay,
what is it?
I wrote it because I was trying to be clear. It's kind of confusing, but let me see if I can say it in a logical order. Okay. Today, I'm in a 12% tax bracket.
Okay.
I'm retired. I will have to start taking my RMD or MRD, my distribution, in a couple years,
Okay.
and then I'll be in a 22% bracket.
Mm-hmm.
So I have some I bonds that I bought when inflation started creeping up, and they've been gaining interest.
Mm-hmm.
And if I were to pay the taxes on that interest today, I'd pay at 12%.
Okay.
But if I wait a couple years and cash the bonds, that same interest that's accrued up till today, but when I cash the bonds, that interest would be taxable at 22%.
Okay.
So if you look at the IRS publications or the Treasury Direct publications, they both say you can pay the taxes as you go, which would be great for me because it would save me some money. Do you follow what I'm trying to do?
Okay, so, all right. Well, first of all, let me explain about tax brackets. The first thing that happens, if you have taxable income after you apply your deductions, then the first bracket is at 10%. If your income then is over that, then it goes to 12%. Not on the whole thing,
Right.
only on the amount over
Correct.
the ending of that bracket.
No, that's exactly right. And
Okay.
here's my
So,
problem.
but here's the thing. Wait, if I might, you need to put this all to pencil to paper, because not only that, are you a single guy, Jerry?
No.
You're married. All right. So, are you and your wife collecting Social Security?
Yes.
The other caveat that you have to consider is that as your income gets higher, the taxability of your Social Security gets higher too.
Right.
So not only do you have to worry about changing tax brackets, you have to worry about paying more taxes on your Social Security. And the only way you can do that is to put a pencil to it and work it out mathematically.
Okay. Now, suppose I do all the math and I know what I'd like to do. I guess my question is more around how do I pay taxes today when you don't get a form from Treasury Direct?
It would
So I
be the
would just
accrued interest. You would have to figure
Right.
that out. But
Right.
let me ask you a question, Jerry. Would you be willing to give up $5,000 to avoid paying $300 in taxes?
Of course not.
Well, that's what you would be doing. That's what you got to look at to see is how
That's
much
right.
interest you're going to be giving
It's
up.
Absolutely, you have to sit down and figure out how much interest you would have gotten at the end, what your taxes are at the end. When you subtract that, what did you actually have in yield against what would happen now if you were to cash in those bonds? But
Right.
what he's talking about is just paying the taxes.
Paying
on
the
it up front.
taxes now,
Paying
but
it
you
up
could
front,
also-
you could do
Cashing the
that.
bonds. I'm not talking
Right,
about
but
cashing
you-
the bonds.
Right,
What I'm
but-
saying is
right,
that
paying the accrued
I've
interest.
already-
And you can do that. Now, when you make that election to do that, you just have to save the how you paid it, because then when you finally get that 1099 form that says what the interest is, you back it off as an adjustment.
Right. And The only thing I'm really confused about, though, is that even though the IRS says I can do this and Treasury Direct says I can do this, there are no forms or no.
Right, they don't send out a
They
1099.
just, all right, here's the thing. A lot of tax law, Jerry, is that if they ask you, then you can prove it. And that's exactly what you're going to have to do. You have to document everything, tuck it away in a file folder, and if they ever write to you and says, Jerry, you owe us a lot of money, then you send in that information and you show that you've paid the taxes on it, and you're good to go.
Right. This is kind of like what you had to tell the other fellow about. They don't want you to do that. They don't want you to file a paper form. I'm getting the
right,
sense
but you're not
they
filing
don't
a
want me
paper.
to pay this interest up front. They
Well,
want me to wait till I
because
cash the bond.
because it's so much easier to track if you just do it the 1099 way. But if you don't want to and you're somebody that's astute, go ahead and do it. Just keep your
keep the
proof
records
of
and-
how you did it, and in the event they ask you, you can send it in. You can come to us. We'll write the letter for you for the IRS.
But okay, but there's no particular way I can designate on my tax form. I'm
Nope.
paying not only the interest I got 1099 INT forms, but I'm paying some extra money to you guys
Right.
in anticipation of 1099s that I'm going to get in maybe 10 years, 20
not
years.
Well, the only thing you could do is on the Schedule B is write a separate line showing that interest so you know
Right.
it's easy
Accelerated interest.
Yep.
Right.
Okay, accelerated interest on Schedule B.
Right.
I'll look into that. That might be the answer. That might be the key.
All right, Jerry.
Thank you very much.
All right, bye-bye. We didn't mean to say that he wasn't a nice guy. We
Right,
loved his little
right,
novel.
yes.
Okay, let's go to Dave. Hey, Dave, how can we help you?
Hi.
Hello, Dave.
Yes. You got me?
I got you.
Okay. I loaned my significant other money to pay her credit card, paperwork through a lawyer. Now we're splitting up, and part of our split-up agreement is I'm forgiving the loan.
Okay.
And I'm like going, okay, from what I can see, it's a proper loan, but I wasn't sure because I kind of agreed to it if it's something I could write off.
Well, if you have a legitimate note and now it's saying the loan is forgiven, then yes, you could mail her a 1099
Debt forgiveness.
C, cancellation of debt. And then you get to deduct it and she would have to claim it as income.
Right.
Okay.
Again, now here's the thing. It's got you have your attorney
We went
wrote
to
to
a lawyer,
her
We got
this.
paperwork.
Okay, well then what Chris is saying is correct.
I'm like, because I was considering this. I loaned her $24,000. The balance is $17,000. I was considering this $17,000 me buying out her half of the house, but then she's insisting on putting me buying out half of the house as only me taking over the mortgage.
Okay, so we cannot adjudicate your situation. Okay.
No,
All I
yeah.
can say is that if it's a qualified debt forgiveness, you can issue her the form that Chris talked about that would force her to claim it on her tax return. And if you have gone and the attorneys and everybody says it's actually a debt that she owed, then you would have a qualified deduction. Short-term
Yeah,
casualty law.
My biggest concern was like when I looked everything up was like, oh, and you had to try to collect the debt. Well, I kind
You
of
do. You have to. You have to try to.
Well, you
collect it.
did.
I tried to
And the
collect
lawyer.
it, but I kind of forgave it in this separation
Well,
agreement.
but if you forgave it, Wayne, then, or is it Dave? This is Dave.
Dave.
If you forgave it, then there's nothing you can do.
I mean, it is what it is. The lawyer says it is forgiven due
If
to
it's forgiven and you were just being magnanimous, you don't have an axe to grind.
Okay.
Okay, Dave.
Okay, thank you.
Talk to you later. Hey, Wayne, how can we help you?
Hi, Esther. Basic Star income, is that included on the federal income tax? I mean, you get it back from New York State as a school tax adjustment, but
It's not. It's not
form
income.
of a check.
It's not income.
What?
It's not
Not
income.
Okay. All right. That
Thanks,
was my
Wayne.
question. You're
Thanks
welcome.
for your
Thank
calling.
you.
Bye bye. All right, Kathy, can we do this quick?
Hi, this is Kathy.
Hi, Kath.
I bought a CD through the bank, and I didn't hear you ever talk to anybody about this, but it was supposed to be one of these things where you don't lose any money, you get it back after 5 years, and if you make interest, you do, and if you don't, you don't. And it was
That
during
sounds
the
like
time
an
of low
annuity.
You bought an annuity, Kathy. You didn't buy a CD.
It was a $50,000 CD.
Annuity.
No, it wasn't an annuity.
It was an
if it was a
annuity.
guarantee like that, that was an annuity.
Well, what's your question?
Well, they said I had to pay income tax every year, and I got a 1099 on because it was tied into the stock market somehow.
Mm-hmm.
And I got
1099-R form?
every year I got a 1099 to pay the interest.
But was it a 1099-R?
Oh, I don't remember.
Okay. Well, why don't you call us at the office, Kathy, 632-7886, and we can talk further. We just kind of ran out of time.
I have a question.
Okay, but you got to call our office.
Call the office because I don't have any more time.
Most
I'm
of
so
you
sorry.
know how to handle
Thank
this,
you,
right?
Kathy.
Yes,
I'm
yes,
Esther
any of
Golias,
our
the
people.
tax lady from EG Tax. If you need the best tax help, our 31 offices are open to help you. Go to egtax.com. Thanks for listening. Thanks for your input.
And all the texters we didn't get to, call us too, please.
Yeah,
Thank
too,
you.
please. Thank you. Bye-bye. Have a great day.